Characteristics or features or functions of accounting. Accounting has many essential features which are briefly stated below. 1. Identifying, it means selecting transactions and events of a specific organization. In other words, identifying means determining or deciding the business transactions to be recorded in the books of account. Second, measuring, it means expressing the value of business transactions in terms of money. Such transactions are known as financial transactions. For example, sale of cars by BMW Limited and collection of sale proceeds. On the other hand, the transactions that can be measured or expressed in terms of money, like strike by the employees, sales policy formed by management, cannot be recorded in books of account. Third one is recording. Once the financial transactions and events are identified, that is recognized and measured in terms of money, the same are recorded in the books of account. Recording is done on the basis of such documents as purchases and sales bills, bank statements, salary slips, etc. Recording means entering financial or business transactions as and when they occur or take place either in a single book of account called general journal or in several books of original entry called subsidiary books, especially in a big enterprise or firm where number of transactions is quite large and all transactions cannot be recorded in general journal. For example, cash, bank and discount transactions are recorded in cash book, credit purchases of traded goods in the purchases book, etc. The following basic features of a recording process in any book of account are as follows. A part. Recording must be done in proper books of account. B part. Recording must be done in an orderly manner or date wise and under proper headings technically called account titles such as cash account, purchase account, salaries account, etc. Third part, C part. Recording must be done as early as possible, that is in a timely manner. Fourth one is classifying. After the transactions have been properly recorded in general journal or subsidiary books or journal proper, these are properly classified. Classification refers to grouping of transactions or entries of same type or of like nature at one place into appropriate headings called account titles or ledger accounts. For example, expenses may be grouped into separate accounts such as wages account, commission account, office expenses account, etc. The classifying process requires posting or transfer of accounts to the ledger from the general journal or subsidiary books or books of original entry. Thus, classification implies preparation of the ledger accounts for transactions recorded in the original books of account. In fact, recording and classification are so closely related that it is difficult to maintain accounting records without some system of classification. Fifth one, summarizing. Summarizing means to bring together a number of classified accounts into one single account. For example, the accounts of various customers are grouped under a single account titled as Debtors account, and the accounts of suppliers are grouped under a single account title as Creditors account. All the incomes accounts and expenses accounts are recorded in the profit and loss account to get one figure of either net profit or net loss. Hence, summarizing involves the presentation of the information found in the ledger accounts in the form of a profit and loss account and balance sheet at the end of the accounting period. So, the art of summarizing involves the preparation of a final accounts like profit and loss account to find out net profit or net loss, balance sheet to know the financial position is, for example, assets, liabilities and capital, and cash flow statement from the classified data in a manner useful to the owners and outside users of the accounting information. Significant. It is concerned with the establishment of a relationship between the various items or a group of items taken from the income statement or balance sheet or both. Its purpose is to identify the financial strengths and weakness of the enterprise. It provides the basis for interpretation. Accounting information is said to be presented in a significant manner only if the accounting records are useful for making decisions or for judging the performance of some firm or person. Interpretation. Interpretation is the main function of the accountants. It means that accountants must be able to explain not only what happened in the past but also why it happened, and most important, what is likely to happen in future on the basis of certain conditions. Interpretation requires analysis of information available in the financial statements, is for example profit and loss account and the balance sheet. Hence, interpretation means rearrangement of various items of assets and liabilities and also of incomes and expenses items in a suitable manner. Comparison of past and present items in the financial statements, use of various ratios and analysis of past trends can be used as important tools for interpretation of past recorded information and future results. The eighth point is communicating. It is concerned with the transmission of summarized, analyzed and interpreted information to the users to enable them to make reasoned decisions. Communication is prescribed by an accounting cycle through which the identified and measured transactions and events pass. Accounting performs a basic function of a language, that is to serve as a means of communication. It is an information system which communicates the accounting information to the internal or external users to enable them to make reasoned decisions.